Tushar Mahajan, head of derivatives at Nomura India, joins us on the show. Tushar, hi, morning. How are you feeling about the market and especially the dichotomy that we've come out of from last week? Historic high to start off with and then eventually a 1.5% loss.
That's true. I think we reached those historic highs back on this absolute euphoria post the election results, and that was way too short-lived for anyone's comfort. You know, the 3% odd fall that we've seen from there, you know, from highs of Monday to about the Friday close, that's left a lot of people unnerved and, you know, begin to again question the strength of the rally. I think where we are right now, you know, we are staring at two big events, both the FOMC globally and the RBI policy meet on Wednesday. And I think that's going to be things which are going to be closely watched out for. We don't have the data which is very supportive right now, you know, the CPI data and the IIP prints that came out last week. And the market is beginning to price in a 25 bips rate hike, but the commentary of the RBI governor or any action beyond that, that could lead the markets to crack up. I think ahead of that, over the next 2 days, we should have some kind of semblance of stability. Dull trading days with strong support around the 50-day moving averages, about the 6140 odd levels.
And what happens if the RBI does increase rates by 25 basis points, which is the street consensus?
I think that's going to be pretty much absorbed by the markets without too much of an adverse reaction or too much of a bright reaction. But what is more important in that case, if the rate hike is only 25 bips, to see how, what is the commentary, the tone of the commentary of the RBI governor. Is it going to be too hawkish or dovish? You know, I was hearing the person before me speaking, and he was saying that, you know, if you cut out the trends are definitely better, and, you know, as a forward-looking policy, rate hikes may not necessarily happen. Given that data point, I think it will be important for the markets to expect some kind of dovish commentary going forward from the RBI governor. If the commentary continues to be really hawkish, we could see the markets crack down below wherever they're trading then.
So Tushar, I'm giving you a 50-50, a rate hike, but a dovish commentary. How do you think banks do in such a scenario?
Plain rate hike, and, you know, just a dovish commentary, we could see banks rally up. We've seen the bank nifty, you know, leading the market during the rally over the last 2 weeks, and then, you know, fall also over the last 4 days. I think if there is a rate hike coupled with a dovish commentary, we could see banks rally again. You know, the bank nifty maybe going back to about the 11,500 odd levels.
But what is it that you're telling your clients, Tushar, at this point in time? I mean, would it make sense to stay put, or rather keep one leg into defensives and play the other with the cyclicals as well?
I think given the way the correction has happened and, you know, our underlying bias that, you know, incrementally going forward, you know, things are probably beginning to improve. We are recommending clients to take advantage of this fall and, you know, add on to the cyclicals and financials in terms of their portfolio positioning. Having said that, you know, you have to realize that around all-time highs as market reaches, it is going to take some time before it begins to consolidate at those levels. And I think each of those moves past the 6,300 odd levels is going to be initially met with some kind of resistance. And if you have to, you know, keep trading with the long bias portfolio, which is what we recommend, we would look to, you know, keep hedging it maybe around the 6,000 levels with some puts of the current month.
The other set of rate sensitives, which is capital goods, and while they had a massive rally up until last week wasn't particularly pleasant. I mean, L&T lost 8-9%. Some of the others too came in for a fair bit of stake. What do you do with these set of stocks?
You know, like I said, Neeraj, it's, you know, industrials, which I include the likes of L&T, BHEL in that, as well as financials. We are looking to trade them with a long bias, take advantage of the correction that these stocks have had in the last 4 days, and, you know, continue to build up positions on these from a slightly medium-term trading perspective.
I distinctly remember that conversation, the 2 or 3 stocks that you had recommended then, and all of them touched the mark and how. So my question really is, what is it that you're looking at trading right now or recommending to your clients, either for the near term or for the series as a whole?
I think we continue to like the cyclical space from a trading bounce per se, and I think that's a space which one would want to take advantage of, given the correction. You know, like I mentioned on the large cap space, I think L&T still has the potential. If I'm maintaining status quo on the RBI policy, we could see L&T bounce back again to those 1150 odd levels that we saw it touch on Monday last. And that's a good name to kind of look at right now. On the banking space, I think leading private sector banks, either Axis or ICICI on the private side, and some of the other public sector banks, barring SBI, given the fears of the QIP there, I think we like PNB at the current levels as well.
Tushar, 2 stocks which have had wild gyrations last week, ICICI Bank and Tata Motors, and how would you approach them this week?
I think Tata Motors has had a decent run, over the last almost 2 years. The stock's moved almost, it's been a multi-bagger in terms of its performance, and at around 400, it's a widely held stock as well. We are now beginning to see a lot of people beginning to sell down the stock, shift their holdings into other more India-centric plays, and I think given the huge amount of ownership on Tata Motors, we could see that stock to continue to be under pressure. We are, there are, green shoots of recovery in the US and China, which is essentially what the Tata Motors play is on. There is fear that, sales may begin to start tapering off. The JLR sales may begin to start tapering off in those markets, and that's where the stock's been under pressure, and there are currency headwinds there as well. On ICICI Bank, like I said, it's had a good run, and then it's had a strong fall over the last 4 days as well. We would look at ICICI Bank around the current levels to definitely enter.
Tushar, I'm interested in a few stocks which will not be contingent to what happens in the RBI policy. And pharma probably fits that bill. A lot of stocks active. Aurobindo, the last few sessions, has been extremely active. Biocon has hit new highs. And you've had news flow in the non-FNO stocks too. Do you like anything here?
As a sector, we definitely like pharma. There's a lot going in for them. Apart from the fact that we live in a fluid world, so they get the tag of defensives and hence they become flavors of the season. You've got headwinds on the currency side also, which is, pushing these stocks up. The space is reasonably active on the M&S space, both small, mid-cap pharma stocks, and then, there is talks about some of the buybacks again beginning to happen. So I think all in all, the space has a lot going for it right now with respect to a lot of the sector-specific details, and we'll continue to play. Lupin continues to be our top pick in this, in the large-cap pharma space right now, along with Dr. Reddy, and we continue to like those stocks.
Tushar, just a couple of stocks which were pretty active all of last week, and that's pretty much been the trend. The likes of an Aurobindo Pharma, which we've been talking about. Tire stocks have really sprung up in action, as has been the case with a couple of other mid-cap, capital good plays as well, the likes of a Crompton, or for that matter, Voltas as well.
When we're talking about the recovery happening, like I said, to begin with, it is the likes of L&T and all which will run up. But, the next year run, remember Crompton, Reeves, Voltas, all these stocks are stocks which have had a lot of macro headwinds, and that's where they've been corrected. They're very under-owned from a valuation perspective. There's a lot of strength going in for them. A lot of the balance sheet issues are beginning to get corrected, and I think one could definitely play these stocks for a reversal. let's leave aside the Monday event. We could look at definitely buying into some of the stocks that you mentioned, like Crompton and Voltas, to go long from a trading perspective.
What about tire names? Do you like anything out of that space?
The only active names on the F&O space is Apollo Tyres, and there's so much going there from the deal perspective, in terms of news flow with respect to the Cooper Tyres acquisition. So as of the moment, given the huge uncertainty around that, we'd probably stay away from that.
You mentioned about the preference for defensives, and I think IT falls in that bracket. Good gains last week. Your fundamental team is positive on Infosys, which is the top gainer in today's session too. Do you like any of the frontline IT names for a trade?
HCL Tech as a house is our biggest pick, and we continue to like that name. Between TCS and Infosys, our preference continues to be for TCS versus Infosys.
You left us the last time around with a brilliant idea on Adani Enterprises. I keep on coming back to it because then you had mentioned 250 and it touched 250 that series. So it was a stunning call when not too many people believed so. Anything in the universe that you scanned and you feel could have either a rally or a drubbing from the December series perspective?
Tough to say right now. I think we're a little late in the December series, and the fact of the matter is it's going to be a slow month with people going away for vacation and all of that. But I think more importantly, there are massive headwinds which, in terms of, I keep coming back to this, the policy meetings, and a lot of the market sentiment or the market mood may begin to change or continue to be in the same vein post these events happen. So I think from a December series point of view, it's tough to have a big call on any of these names which could really be multi-baggers from a short-term trading perspective, so to say.
Yeah, in F&O space, that kind of a move could well be termed as a multi-bagger. Fair call. Final couple of questions, Tushar. What are you doing on the options side, though? I mean, what are you doing on the options side these days?
We played reasonably well on the upside calls on the Nifty ahead of the results. We had benefited from the rise in volatility as well. I think at this point in time, we are looking to hedge some of our long positions, and as you infer from my conversation, we are definitely looking to go long on beta names ahead of the event also, because we think there's more upside risk. So, but we are looking to hedge that with about 6,000 calls. I still firmly believe that the 50 DMA at 6140 is a good support level for the market, but you can't go out naked into the market. So for the current series, we're just buying some 6,000 puts to hedge our beta long bias.
Tushar, how would you approach the metals pack, the likes of a Tata Steel, Sesa Sterlite, etc.?
They've had a good run. We would look to take out money on all these names at this point in time. I think commodity markets globally are looking a bit shaky right now. And if there are worries about the tapering, which may begin to resurface post the FOMC, we would look to, take money off on that.
Okay, fair call. Tushar, just one final word really. We've discussed most of the defensives as well as cyclicals. One particular space where fundamentally people are turning bullish are the two-wheeler auto names. That's something that we haven't spoken about. Is there a view that you have on either a Hero Motors or a Bajaj Auto?
I think we think the stocks are definitely moving a little ahead of the real number story that may begin to emerge, and people are thinking that given the rural story, given the rural agricultural output, plus the fact that there are elections looming ahead, these stocks tend to do well ahead of the elections. From a trading perspective, we'll continue to trade with a long bias on this, but I should say that from a fundamental perspective, as a house, we are not too bullish on this space. But purely from a trading perspective, we'll continue to be long on both Hero Honda and Bajaj Auto.